All right, guys. Good morning. Good morning. Welcome aboard to the morning note. Let's make sure that my headphones are working. All right. Good morning, guys. Welcome aboard to the morning note. My name is Carlos Garcia, founder and CEO of GAR Capital. Hope everyone's having a nice morning this morning. Uh, Hurricane Ian did make landfall this yesterday, actually. This morning, in terms of being in Florida with the rain, we had rain and wind last night. I had the shutters up, so all good. Electricity did not go out this overnight. It went out just yesterday, the 2 nights before, for like uh, maybe an hour or so. I came to my computer 2 nights ago, and then it was shut off because of the power surge. So other than that, very, very lucky here in Central Florida. But obviously, our thoughts and our prayers are with our friends in Tampa and south of maybe Fort Myers and those areas. Obviously, the devastation looks pretty bad. I was looking at the Weather Channel this morning, but at least now it is calm, at least where I live. So again, the most important thing is, hey, can we work at least here while you're here? So happy to be on board. Good morning. Let's go ahead and get started. It is 9:02 Eastern Standard Time, September 29th. 2022. You're looking at the Bloomberg terminal. We'll go over some of the news, we'll go over the charts, and of course, your questions. Let's go ahead and begin. Dow down 305 points after yesterday's nice run yesterday. Again, it was just a nice, oversold buy day. Let's just call it oversold bounce, like we've been saying. Just an oversold bounce. Again, could it last? Sure. Again, yields are going to kind of give us a little bit of the guide of where we're going to go. Let's go ahead and go over the rest of the charts. Nasdaq down 1.62% this morning. Bank of America was downgraded by, Apple was this downgraded by Bank of America this morning. Let me get you the exact information. B of A, Apple shares have fallen perceived as a relative safe haven. However, we see risks to this outperformance over the next year as we expect material negative estimate revisions driven by weaker consumer demand. I kind of noted that yesterday regarding the dollar, that EPS estimates will come down with a stronger dollar. So again, expect earnings to come down, but the expectations, again, the forecasting, that's what really earnings are all about. Does it beat forecast? Does it have good forecasting for the next year or guidance moving forward? We know that Apple did not do a guidance this past quarter. So again, we need to wait and see approach on Apple. We had Apple calls yesterday. We caught them before close, thank God, because now we're at 146.51. We had the 150 calls. Well done, team, to get out, especially in this choppy market. S&P 500 down 1.29%. Russell down 1.5%. 1694 is the price. Crude oil is up 0.72%, even though we had that hurricane in the Gulf. Seems that not really going to affect oil production. Gasoline futures up slightly, $2.46 a gallon. Natural gas down 1.7, up 0.17%. Gold futures down 0.61%, 1659 an ounce. Again, that 1700 level, 1650 seems to be that kind of range we've been stuck in on gold. We'll bring up the chart right now, actually. Let's take a look at it. And again, we've been looking at really just the weekly chart. And you could see that 200-day moving average right at 1686 on a weekly basis, kind of stuck within 1650 to 1700. Even with recession fears, we're about to go over that here in a second. Gold has been coming down. So again, that's more of a dollar than anything else. Silver down 0.85%, copper up 1.41%. In Forex land, 96.94 for the euro dollar. That's down about 40 pips. 144.72 on a dollar yen. That's up 59 pips. Pound dollar, 108.99. That's actually green today. Bitcoin futures, again, 19,210, kind of hovering around there, 1.81%. 1321 for Ethereum futures, down about 1%. Volatility index is up 6% this morning, 3203. The dollar index, we'll take a look at that here. That's right now at, let me go ahead and bring up an hourly chart so we can see the exact price action. Dollar's up 0.5% today, 113.16. Again, still off the highs, which is a really good sign. We're close to filling a small little gap on the hourly of 112.77. Let's see if we fill today. And in regards to 10-year treasuries, 3.794 currently. Let me see if I can get that see if I can get that chart for you guys here. Here we go. Here is the chart on the 2-year. Jeez, this is acting crazy. Give me a second. Here we go. I have the Bloomberg terminal up. All right, here we go. 10-year Treasury yields. Here's the last 3 days, and you can see we did peak at 4 a.m. this morning, right around 5 a.m. on the 10-year. We rolled over a little bit, so that's good. But again, the markets are still down. 2-year is acting better than the 10-year right now in terms of yields, and that's really why we're seeing weakness in the equity markets. Again, the 2-year yield. Again, lower than we were 2 days ago, but again, still bouncing above 4.2253 on a 2-year note. We had a couple of news headlines come in today. GDP officially recession. We talked about that. GDP annualized now at 0.6% in the red. Let me go if I can bring this up. What is up with my computer? I reset it and then now it's acting all weird. Here we go. 0.6% to the downside with the estimate personal consumption 2% versus 1.5% estimate. GDI, which is gross domestic income, 0.1% versus 0.144% preliminary. So again, officially in a recession, 2 consecutive quarters of GDP negative. And you can see if we're looking at first half 22 real GDP, that's up 2.7% year over year. So again, how do you calculate real GDP? Economists track real GDP to determine the rate at which an economy is growing without any of the distorting effects of inflation. The real GDP number allows them to measure growth more accurately. So if we take away any kind of inflation, first half GDP is up 2.7% year over year. But again, with the actual reality of inflation, we're down 0.6% year over year on a, quarter over quarter basis. So again, a recession is here. That's where we are. You can't really sugarcoat that. That's just the reality of it. The good news is that recessions don't last forever, obviously. Maybe that gives the Fed some kind of reprieve on rate hikes, but that was changed immediately by Fed Governor Mester, who said, we're not at a point where we should think about stopping rate hikes. So they were late to the party, and they're still holding the party in terms of rate hikes. In terms of other news, we also had the Nord Stream leaks, talk of NATO saying that it was Russian or something like that without any proof. Uh, you know, just a whole lot of mess. Russians are the Russian the Russian media is stating that the Nord Stream pipeline leak has nothing to do with them. So it's just a back and forth right now. So that's really the news that we have today. In terms of the market, let's go ahead and start taking a look at some possible opportunities. Again, we were red on futures yesterday too, and then we did bounce. So looking at SPY SPY, you could see a little bit of a inverse head and shoulders. We're kind of holding around that shoulder line, let's just call it. If we can hold above 365, I think that will be decent for at least some kind of a retest of this bounce that we had yesterday. If not, really the level that you're looking for is really the lows, 358.72. Even if you put 362.17, which was the SPY lows for the year, that still wouldn't be enough because that seems to be kind of the level that we've been bouncing. Looking at the market, I did talk to Investment Club that a bottom could be in place just with regards to yields and the S&P kind of ratio that we had. If you remember back in June, rates were around 3.2% on a 10-year basis. We're trading right now around a 3.786, and we're bouncing off that 362 level on SPY. So again, we have seasonality coming up where October is a stronger month than September, November being the strongest month of the year, December being the next strongest. So fourth quarter is the expectation that we do bounce, obviously. But again, things can change. We got that recession talk. That's done. There's no talk. It is a recession. We could just say that with complete confidence that we are in one. The good news that recessions don't last forever. You just rip the bandage off and you move forward. But recessions are what it takes to kill inflation, especially runaway inflation. The question is, when do we bounce? How deep does this recession go? Are we more 2008 or are we more 1982? That's really the question that the market is looking at now. Again, oversold conditions that we had yesterday, a bounce was pretty much inevitable. The question is, do we get more of a bounce? That's really it. So let's go and take a look at the RSI here on the SPY on the daily. And again, we're trading right around 34. Last time we had around 34 was really right around June 21st, and then we started moving higher. So again, I'm still in the camp that, October seasonality is going to be stronger. I don't think we get to 5,000 or anything crazy. That would be great. But again, let's see if we get back to 390, maybe by mid-October, maybe November. If that's the case, I think that sounds pretty slow, but we could get there. We have no Fed rate hikes or rate decisions in October. We do have CPI. We do have core. I think we have the CPI number, not a CPI number, core PCE number on tomorrow, Friday, because it is Thursday. Sorry. So with that being said, it's really just looking at the market moving forward. Do they kind of, digest this information and move forward, or do we have more downside? I mean, that's really all you could say in terms of Apple, my largest holding. 146.71 is the current price. That puts us right around here. We had a nice bullish candle, a hammer candle on the daily, holding this trend line. I expect Apple, even with the downgrade, even with cutting that back production of iPhones and demand, Apple is a pretty resilient company. There's two stocks that CNBC stated that people are just not selling in regards to retail. The ones that have just been holding and holding, everyone's been holding, is Tesla and Apple. So again, that's probably the last leg. If you remember months ago, we said that energy and housing would be that next leg down. Energy went down, housing is down slightly. So again, does Apple and Tesla still hold up, or let's just say Apple, which is uh, having the best return or the best performance for the S&P major mega cap stocks throughout the year? It's outperformed Microsoft, Amazon, all those names. So Apple still kind of that safe haven for many traders and investors. Again, I own tons of Apple stocks, so I don't care about selling it anytime soon. But again, that's something that people kind of hold on to. That's to a lot of people, that's everything. It has been performing excellent for the past decades. So imagine when Apple, once the hands are thrown up and it's game over, Apple will continue to go lower. The question is, do we get to that point? Does the Fed really tighten us and tighten us to the point where you just throw your hands up and say, I need liquidity, sell Apple stock? I don't think we're there yet. But again, we'll see what the Fed does. The Fed is, notoriously known for switching plans on a dime without anyone expecting it, and the market just flips. So again, day by day approach as we move forward. It's a weird week with hurricanes and everything, but the good news is that at least on this end, just rain. Other than that, nothing really catastrophic. Dow Jones may keep falling to 29,243. Let's go and take a look at the Dow together. Remember, the Dow did hit new lows this year. So we'll take a look at it. We'll bring up the weekly to kind of give us a little more context. And we're really just hugging right here. That was where we were, hugging that 200 weekly average. We do have a gap to fill at 28,529. That gets us to 509. That gap is filled at least. The level you're looking for, Alejandro, is 29,243. 29,243. Let's see. That gets us to or 29,509. 28,469 is a gap to fill. That's a big level. So I don't see 29,243 here. That'll get us to right around pretty much the bottom end of the daily candle that we had yesterday. So you're probably looking at a retest of the lows, which is fair. Chad, as you think about GDP numbers, are we officially in recession? Officially in recession, we've been in one. So when I watch Bloomberg and CNBC says, oh, CNBC's recession is possible. No, man, 2 consecutive quarters. Let's not change the definition. That's what it is. You're in a recession. That's it. We had one 2 years ago. We have one again. And then before that, we had in 2011, we had the slowdown, but 2008, 2009 was the last time we had a recession. So usually around every decade we get one. We just had two recessions in 2 years. How fun. Looking at a bounce play here, again, we just need to see what the market does, really the 2 year. If you're looking at SPY, again, I'm just going to look at the broader market, at least on the hourly, short-term basis. Again, it still has that head and shoulders formation pattern right here. You could see that, hey, we start retesting 370, we can get that leg higher to 374, that 200-day moving average. It may not happen today, but really my target for SPY for at least the next week, if we start getting at least some kind of movement. If this inverse head and shoulders works, 375 would be the target. That was my SPY call that we had yesterday. We called SPY and we called Apple yesterday for calls. We caught both. We had 375 calls and the 150 calls on Apple. So we're out of those at least. Moving on. So I do expect us to bounce. I really do. Again, just oversold conditions on the daily. You're going to get at least some kind of movement, but it's just not going to be one green candle to the upside, guys. You're going to have at least some of these volatile days back and forth. Again, it's all in the yields. Why did TLX fall so much yesterday? Yeah, the most it's happened since 2009. That marked the bottom of the bear market. And again, when you have the Bank of England putting a stop gap on bond selling by buying a limited number of long-term bonds, again, other central banks are looking at that. Bank of Japan, European Central Bank, maybe not the Fed may not act this way, but again, it shows that at least central banks are understanding that, hey, something is going to go down. If you keep tightening, we're going to break something. So again, we have a little bit at least of a backstop. As long as there's buyers of bonds, you're going to have bond yields do fall. But again, even Citadel, Ken Griffin said that 4% on a 2-year is very enticing. So maybe we see that, we're getting into the bond market again, where, government bonds are bid again. Again, that is the safe investment, the safe haven. But having bonds and stocks go down at the pace we're going on is pretty unprecedented. There really is nowhere to hide in a sense other than cash. So again, the one that's going to lead us out of this bear market, because it doesn't last forever, is going to be bond yields. So bonds. If bonds are bought on a 2-year basis and we start breaking down below 3.8%, 3.75%, 3.5%, and we start seeing some really good bids and yields are coming down, equity markets are going to rise in sympathy. So again, it's really based on the 2-year. The 2 years is telling us inflation expectations. The 2 years is telling us where the Fed's mind is at moving forward. So again, we just had Mester say that there's no talk of pausing rate hikes. But again, last year in November, they said there's no reason to raise rates. So again, that was only about 10 months ago. Take that information with what you want. Where are we thinking the bottom is before we're buying? And again, I am looking at some names today, looking to go shopping. If anything, let's go and take a look at one that I've been looking at the most. It's really Google. They did fill that gap here around 98. I will be looking at to add to my Google position. That's really the only one that I really, really wanted to own. UNH I've owned for a while. That stock is too strong right now to buy. It's not exactly enticing. In terms of Apple, I mean, I already have tons of Apple. Do I really want to buy here? Not exactly. If you're looking at Tesla too, there's a gap to fill here at 251. So really the only one that stood out to me is Google. If you're looking at the semiconductors, if you're looking for a bounce, AMD isn't a bad place here. I mean, 6270 was my target. I can hold a little bit longer and see if I can catch that. But Google's the one I really want. You don't see any more room for the downside for Google? Oh, absolutely. I mean, you could definitely have some downside. You just filled this gap here. In regards to other downside gaps, hey, you could talk about November 2021. There's one here at 984.51. So again, with regards to Google, maybe start dollar cost averaging is maybe what I will do. Maybe not just put everything into one shot. I'm buying SpyG today like I do every week, but maybe start throwing down a couple of shares of Google every week or every couple of weeks moving forward so I can start averaging a good price. That seems to be the best route to go instead of just timing things as we go, because we do have more gaps to fill to the downside. I don't expect more downside from here just because of where yields are from June and where we are today. And again, I don't, again, so much bad news already baked in a sense that, again, the path of least resistance, let's just call it, in terms of news is to the upside. Why did Netflix pop yesterday? I was looking at that yesterday, and again, a lot of really the big thing was these high beta names. They're going to move more with the S&P. The S&P moves 1%. These high beta names that have been beaten down are going to go up 2, 3x of that. Again, these why they're high betas. They move more than just the S&P or the Nasdaq, in particular, just the index. There was talk about that Marilyn Monroe movie that was did very strong for Netflix that just came out. I was watching a little bit of last night. It was kind of boring. So again, people are into that Jeffrey Dahmer thing. I'm not into serial killers or whatever. But again, Netflix popping, at least on the hour, looks great. But in terms of the daily, I mean, 251.75 is your target to break out. If it does, then you could target the gap fill at 328.64 for a possible swing or an investment. But again, these kind of names, the upstarts of the world, the the Neos of the world, the Squares, the PayPals, they're going to move higher when the stock market is higher. We know that those are just high betas, unless it's specific company news that's bad for them. For example, like Netflix cutting, losing subscribers. That's a stock specific news. But in terms of like the actual like ARKKs of the world, the ARK funds, those are high betas. When the stock market goes higher, like it did yesterday, we were up 500 points. They're going to move higher as well. Netflix had a heck of a day, but again, didn't really break anything. 251.75 on the daily is my target, but a hell of a day yesterday for Netflix. Do we have any more headline economic news coming this week or next week? We have core PCE tomorrow. That's an inflation reading that the Fed really, really keeps an eye on. So we'll keep an eye on that number yesterday. Yes, we're officially in a recession. Let's rip that bandage off and move on and see when we can get out of recession. Let's see what we got. Let's make it a great day, guys. I'm going to go ahead and check outside and see if there's any damage in the neighborhood, kind of assess, and we'll go from there. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Willing with electricity, there's a lot of people in Florida without power. We're one of the lucky ones. So if the power's on, the internet's on, we're working. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Enjoy the Thursday night football game tonight. Bengals and Dolphins, going to be a good one. And I'll be watching that tonight. And we'll see you tomorrow. Cheers, guys.